So question 2, the additional substantive procedures for the accuracy of the loyalty program. So we've got here a summary. We've said in terms of IFRS 15, there's going to be the standalone price and the transaction price of both the initial sale and then the customer loyalty program. So we're going to have to test the calculations of both those for each. Included in that calculation is going to be this estimate to get to the standalone price of that customer loyalty program. So I'm going to have to test that as well. Okay, so I think the first point of call is going to be to go back to the working paper 120 to see all the information that I can go about testing, and then to make sure I test all the elements per IFRS 15. Okay, so as I look through here, I can see that all app users are automatically enrolled. They started this program on the 16th of November, so I'm going to have to test that anybody who registered post 16th of November has been included in the customer loyalty program. So it's going to be my first test. So question 2, I'm going to say obtain a list of all customers who registered on the app post 16 November 2019 and inspect that all these customers appear on the list of customers included in the customer loyalty program. And that's my first procedure done. Now my next point is that if you spend 10 Rand, you will get 1 point. So I need to go and recalculate the total number of points that have been available based on expenditure. So for those of you who are level 2, you know you can now use CATS because they have a computer information system. Level 1s, you just need to say recalculate, forget the using CATS. Recalculate, and I'm going to put an asterisk there because there's going to be a lot of stuff we're going to recalculate, so I'm going to try and group them now together. The total points awarded from 16th of November by dividing total app sales by 10. And that's the first calculation of the number of points that have been made available based on the sales to date. Okay, that would then now also include your fractional points because my calculation would have divided by 10 and whatever you get will have a fraction. The next thing was that 10 points are equivalent to 1 Rand, which the app user can use towards paying for subsequent orders. So now I can go and do a calculation of the Rand amount of the points that have been earned to date. So the total Rand value of the points awarded by dividing the points above by 10. Okay, and I've now done the next calculation. Then we've said that you don't earn points if you use those points. We are going to have to test this, guys, but I want to first do the calculations. So let's put that down, but we'll leave some space for calculations. So what I want to make sure is that where somebody has used their points, they did not earn more points. Okay, so I'm going to have to go and inspect that for using a sample of purchases paid with points, that loyalty points were not awarded on that purchase. So I'm just going to leave some space here and I'm going to say select a sample of purchases paid with loyalty points and inspect that loyalty points were not awarded on that purchase. So I've now tested that. Points are awarded the first day of the following month from where the purchase was made. So I can go and recalculate that. For each month, points available match to the sales made in the previous month. So I'm going to say, using CAT to recalculate the points awarded in the following month based on the previous app sales. Okay, so guys, although I've initially done the total here, I've now just gone and tested their actual accounting for them. And then loyalty points expire after 4 months. So I want to go and inspect that there are no loyalty points available for points awarded more than 4 months ago. So I'm going to go inspect the loyalty liability to ensure that there are no points that were awarded more than 4 months ago, which is not possible because the program was only launched 4 months ago, but still, it is a test that I would have to perform based on the information. And I can tick that off. Now we get to total app sales in March, okay, which I'm not too worried about at this point, and I've just gone and said points awarded for April, but I'm not interested in that because that's looking at the liability for the next period. So I now need to start looking at my transactional price and my standalone price for this customer loyalty program for the whole period for year ended March. Okay, and that's where we've got now our 85% estimate that was done by an industry researcher. So some more information here. There was a management expert. So this person is going to have to be tested too. Alright, so because I've got this, before I go into testing the estimates and the management expert, let's test the calculation because I've got the 85%. So let's go and find out or test the standalone selling price of the customer loyalty program, which is the 85% of those points. So I'm going to recalculate the standalone selling price of the loyalty program by taking the value of the points awarded and multiplying by the 85%. I've now got the standalone selling price for both the actual goods and now the loyalty program. So I can now use my ratio for those to determine the transactional price for the goods and ultimately the contract liability. So I can go and say, recalculate the transaction price of the loyalty program by applying the standalone ratio for the two products to the transactional price, transactional total. Okay, so ultimately, guys, what did I do? I had the standalone selling price for the two items, the goods and then for the loyalty program, and I had got a total from that. I then went and applied what is the percentage for the goods, what is the percentage for the liability based on the total amount, and used that percentage to apply it to the total transactional price to work out what is my contract liability and what is the revenue from the goods. Okay, so I applied the percentages that I need to in order to calculate the transactional price. Now I've gone and I've counted for it or tested the calculations for it according to what IFRS says. Unfortunately, it's a little bit trickier because we don't have figures. We don't have the total sales from the app up until March, from when the loyalty program was launched. And so without a total, you can't actually go and see, put the calculation or put the amounts together to be able to do the percentages themselves. So you have to just actually talk about testing that ratio according to how it's supposed to be per IFRS 15. Okay, now I've gone and done that, which means all I'm left to do is to go and test whether this 85% is a reasonable estimate, and to test if the person who determined that 85% is actually qualified to go and do so. So guys, I want to go and look at my ISA 500 and using the work of a management expert, and then I'm just going to look at our lecture slides for an estimate, because we know the standard is quite complex, so that I can go and put down procedures to test both of those in order to conclude. So I've come to ISA 500 audit evidence because I know that using the work of a management expert is in the standard. If you don't know that, then you need to go and flag that under our sufficient and appropriate audit evidence, information to be used as audit evidence, a management expert is discussed. Okay, so let's go to our requirements, and this is where you would flag this if you haven't done so already. So paragraph 8 says, if you are going to be using the work of a management expert, then you have to make sure that they can perform the duties. So we have to evaluate their competence, capabilities, and objectivity, obtain an understanding of their work, and evaluate the appropriateness of their work. Okay, so before I just jump into accepting this percentage, I need to consider that. So guys, we'll go to these A paragraphs to add procedures to test the management expert substantively. So in order to test competence, capabilities, objectivity, we are going to consider personal experience, discussions with the expert, knowledge of their qualifications, or any published books. So that's how I'm going to first test that they are competent and capable. And in order to test that they are objective, I need to then go and discuss with management and the expert if there's any financial, business, or personal relationships that the expert has with the business that would affect their objectivity. So I'm going to put those down. So I'm going to say, in order to use the researcher's work, the auditor needs to consider the competence and capabilities as well as objectivity of the researcher. Therefore, we need to inspect his qualifications, or we need to inspect published books. So I'll give two examples for competence, and for objectivity, I would say I need to inquire with both management and the expert about any financial interests or relationships that would affect their objectivity. So then I've tested their objectivity and the competence. Then we've got to gain an understanding of the expert's work. What were the professional standards? What were the assumptions and methods used? And then we would need to test the data. Okay, so consider the work if the assumptions and the data is actually reasonable. So guys, in that I'm going to look at the work of the estimate, or testing the estimate, because that's what the expert came up with. So I'm going to now go into testing the estimate. And so in testing an estimate, you need to know what is the accounting policy. We need to consider if it's consistent and or authorized. So this wouldn't be consistent because it was a new policy, so we need to test that it has been authorized. Then testing if it's reasonable, comparing it to the industry norm, something I'm going to have to go and do. Test the calculation, recalculate. If an expert was used, maybe consider getting our own expert. So in this case, looking at our own expert, and if there's subsequent evidence that provides subsequent events that provide evidence as to the value. Okay, so now I'm going to bring in all of these tests for my estimate. So for the estimate, I want to first inquire about the accounting policy and ultimately compliance with IFRS 15, but at this point just the accounting policy. Then I need to inspect the minutes of meeting for authorization of this policy or of the approval of the customer loyalty program. Then I need to compare the estimate of 85% to the industry norm, because this we must have, considering it was an industry researcher who was used, to see if it is reasonable. I also want to make sure he has this percentage in his calculation. Inspect the report from the researcher and agree that his calculation is 85%. Another reasonableness test I can do is to almost calculate my own estimate. So I can say, go and calculate the average number of points used in the previous 4-month cycle and compare it to the 85%. when it comes to an estimate, we could look at any subsequent events. So I can go and inspect the number used post year end to compare to the 85% usage rate or estimate. Okay, so now I've tested the estimates, I have gone and I've tested the experts, and ultimately all of the requirements of IFRS 15 in calculating the customer loyalty liability have been tested. So I can move on. Let's do question 3.